Hey guys, welcome back. In today's video, we are talking about the retail float, the AMC $400 target, the cat errors, and many more in this video. First, we take a look at this. In Sweden, the number of AMC holders is made public by each broker, and that number constitutes some 0.2% of the total population. If each Swedish AMC holder had the same number of shares as me, little Sweden alone will lock up some 2x the entire float. Now, one of the things we've talked about has always been how easy it is when you consider just how many retail investors there are out there, and in terms of the amount of shares they buy, how easy it would be to obviously lock up the entire float. And obviously the thing talked about here, 224,000 locking up AMC's entire free float with an average of just 1,000 shares. But the point of understanding about this is seeing the fact that can't imagine how many times over the float has been sold. I have close to 30,000 shares, and I know many with the same or more than me. Almost daily, I meet someone new that is holding 5 digits. Now, we obviously talked about, Sweden alone with a little, with a smaller population, and they could lock up 2 times the float. We see that 224,000, which we have more than that, can easily lock up the float. And we know that there are people out there who have over 30,000 shares. And again, obviously, we're just taking it as it is. Now, this is something that is obviously true. There are people out there with 30,000 shares, with 5 digits, even with 6 digits out there. On this channel, we are constantly updating in terms of showcasing people that have bought into shares of AMC, people that are holding, a large amount. We've shown people that have held, 10,000 shares, 5,000 shares. We're also showing people constantly buying 50 shares a week, every single week. And again, that goes for a lot of retail investors, not just for the odd few, but actually when you take a look, is that the overall retail investors are buying into AMC. And so that alone obviously allows us to understand just how many times the float has been sold, in terms of knowing that the AMC float has long gone past what it should be. And this is the issue that we obviously have. And this is the issue that's obviously occurred with MMTLP, and is why there is obviously all this investigation, is why right now recently we have obviously been covering that. And it's why we talked about in yesterday's video in terms of understanding how the MMTLP situation is already serious. But when you consider the fact that the float for AMC has been sold even more than MMTLP, then this thing gets even bigger. And another way to understand this is just obviously taking a look at the OBV. When this shit blows up, a lot of Wall Street companies will get leveled, that's for sure. Now, we're obviously taking a look at the OBV. Now, why is the OBV important? For those of you who don't know, OBV essentially shows that the people who have bought into AMC, and it's showing that the ones who've bought in, the people who have bought in the past, have they sold? Are we getting new buyers? Are we seeing everyone selling? Essentially, you see the influx of capital with AMC. Now, with this, what you can see is that the AMC OBV has obviously increased and stayed at a stagnant level. That means that the people who've bought in the past have continued to hold on to the shares of AMC. Now, what's interesting about this is that normally the OBV should reflect the price. So as we see the OBV go up, the price obviously goes up as well. Now, that hasn't been the case. What has been the case is that OBV goes up, OBV stays up, but yet the price is. So you can view it as people bought into AMC and they've held on to AMC, yet the price is dropping. And it isn't caused by people selling, it's caused by people buying and holding. So obviously that doesn't make sense. What else doesn't make sense is about seeing how we can already be seeing that the OBV factor, something that we've used in the past, is already outdated. And what I mean by that is understanding that we are constantly seeing people buy into AMC, yet we're not seeing the OBV increase. What that could mean is that the OBV has already shown that the float of AMC, the existing float, the float that should have only existed, is already being bought up. And so anyone who's buying into AMC right now, like we said in the past, is very likely to be buying into these synthetic shares that institutions have created. Now, it isn't a bad thing. Like I said, when the squeeze, it will happen. The synthetic shares that has been created will have to be bought back. And so there is no current difference between the real shares and synthetics. It's just the fact that we talked about how the real shares can be used to create more synthetic shares. But what we can then see is that the OBV is only reflecting that the people who have bought into the real shares of AMC have not sold, and that there are people still constantly buying into AMC. So no one has sold their real shares, and then they're still buying into the AMC shares. And that's why Wall Street are worried. And you can see this, and this is a clear reason for why they should be worried. Take a look at the post-reverse split share price in 2017. It's $230 to $300. Just after AMC bought Carmike and became the biggest theater, analysts gave AMC a $400 price target. The then shorts piled in. AMC shouldn't be compared to CNK for price, not then and not now. Now, this is something that needs to be talked about because it clearly shows that the real price discovery for AMC is not there. That what we're seeing for AMC is definitely not a true reflection, because we understand that yes, AMC obviously suffered during COVID, and that's why the price fell down. Obviously, there is nothing wrong with that because the fundamentals reflected that AMC should go down. But what's important to note is that right now, as of 2025, AMC is in a better position than it is back in 2017. And so if AMC in 2017 was worth $230 and people gave AMC a $400 price target, why isn't that the case for AMC now, where AMC is obviously in a better position? Some of the things you have to understand is in 2024, for June, we made the best ever EBITDA for AMC history in its 100+ year history. And so whatever you're looking at, AMC is in a better position. And so this is why we talked about, because of the fact the shorts piled in, everything has been distorted. Everything has obviously been a lie, being a manipulation, and that's why they need to bring it down. You can see this happened when they were all saying it was going bankrupt, that it was going to a penny. AMC is thriving. I know what I hold. I'm just one of the millions who were early, not wrong. Because what we can see was when they did say that AMC was going to go bankrupt. And like I said, we can't be biased about this. AMC's fundamentals did show that AMC was in a very risky and, volatile situation because they couldn't have open theaters, therefore not making revenue. But yet we saw how AMC reflected. We saw how AMC's price soared back in those days. And we've seen how AMC has far recovered from obviously the whole COVID situation. And this is the price that we were once at. So if AMC has been in a better situation than 2021, a better situation than 2017, why isn't the price of AMC, higher than what it was in the past? Well, the answer is very simple. Because the shorts have piled in, because everyone has bought into AMC and not selling, and it's retail owned, because the fact that the float has been sold so many times over, and that's why they can't afford to let the price go up, and that's why they constantly feel the need to suppress AMC. Because like we talked about, if the float has been sold so many times over, if they have to buy back hundreds and billions of shares of AMC, just imagine how much of a dent it would, and just imagine how many Wall Street firms will be bankrupted when they have to buy 5 billion AMC shares at the price of $600, at the price of $1,000, at the price of $10,000. And they know that's what AMC will be. Not only because when we do get true price discovery, AMC's fundamentals will obviously reflect way higher than we are at right now, but when they have to cover all these short positions that they've created, when they have to buy back all these synthetics that they have created, it's going to boost the price up even higher. And the fact that the retail owns the majority of the flow, or if anything, every single bit of the flow, then we get to choose the price. And that's what they are worried about. You can see also, breaking, FINRA failed to deliver the monthly consolidated audit trail error data at today's meeting. This comes just 1 month following the bombshell report that there were $8 billion trading errors in one day on Jan 13th. Is that just an oversight, or did they intentionally FTD the data? Now, this should be something that needs to be talked about and highlighted. The reason why I say this is because in the last few months, what we have seen is so many things that have been trying to remove the transparency of the market. We saw how previously shorts were required to report their positions if they had over $10 million short positions of any company, but yet that has been delayed till next year in 2026. We then saw how they say that the cat system should be on a diet, that they want to obviously stop the cat system, that they want to put it on a break. And obviously these that were once used to bring transparency are all being stopped. And now, as we saw, that because of the cat system has already caught so many errors, has caught out what these firms have been doing, all their bad faves, etc., etc., we're now seeing them failing to deliver the cat data. So this is definitely highlighting that something is going on, and this should further strengthen our view of why the market is corrupt, why the shorts are worried, and why regulations are trying to bail them out. Thank you guys for watching. I'll catch you guys next time.